For many private and hard money lenders, the ultimate capital source for funding loans is a bank warehouse line of credit, but they are difficult to qualify for, and not many banks offer them for lending nationally. In this video, I'll tell you about 2 alternatives to warehouse lines you should consider, and how to find companies that provide capital for private lending. I'm Rocky Butani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct, private, hard money lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. This video's topic is mainly applicable to loan originators, including private lending firms and mortgage brokers who want to become a lender. If you're a real estate investor, you probably won't find this information to be useful, unless, of course, you're planning to start a private lending business. For loan originators who operate with a business model of funding loans and then selling to the secondary market, bank warehouse lines are typically the ultimate capital source because they are the cheapest cost of capital available. The challenge for most lenders is being able to qualify for these bank warehouse lines. You typically need to pledge an existing portfolio of loans worth several $1,000,000 just in order to get the line. Another downside to warehouse lines is the risk of it being pulled if there is a major economic event. While the likelihood of this happening is very slim, if it does happen, it could kill your entire lending business. Many local community banks offer warehouse lines, but they typically restrict the geographic areas where you can lend. For example, a community bank in Texas typically won't accept notes in which the collateral is located outside of Texas, or a bank based in New York may not accept collateral outside of the Northeast. So you can't use community bank warehouse lines to lend nationally, and the line amount you get from a smaller local bank may not be enough to support your growth. If you are unable to get a bank warehouse line to support your private lending business, there are 2 alternatives you might consider. The first alternative is what I call a pre-takeout warehouse line. This is a very unique product offered only by a few companies in our industry. These capital providers have relationships with multiple institutional loan buyers, so long as the loan you're originating will be sold to one of those approved institutional loan buyers, the pre-takeout capital provider will allocate a certain amount of money to you based on your average loan volume. At closing, they'll fund 80 to 90% of the loan amount, and you need to contribute the difference of 10 to 20%. The cost for the short-term capital will likely be in the range of 50 to 100 basis points. And the key to this program is the loan must be sold to the institutional loan buyer within 15 days. There are lots of other aspects and insights about this unique capital program I can get into, but I'll make a separate video to cover this topic in detail. The second alternative to bank warehouse lines I want to cover is a liquid mortgage fund. So you would form a mortgage fund just for the purpose of funding loans that will be sold to the secondary market. The fund won't hold any loans for more than 30 days. The key selling point to potential fund investors is that no lockup period would be enforced. Because you'd be cycling the funds once or twice a month, you can allow the fund investors to pull out with a 30-day notice, and that low commitment could make it easier to raise capital. When compared to the pre-takeout warehouse line alternative, the main benefit of the liquid mortgage fund is you're not limited to a small number of institutional loan buyers. You can sell loans to other types of capital providers, such as insurance companies, family offices, and even individual note investors. They likely won't be as efficient as the institutional aggregator, but at least you have more control and flexibility. Many private lending firms use multiple capital sources. It's possible you may have a bank warehouse line, manage a fund, sell loans to institutional aggregators, get some loans table funded by individuals, and also use a wholesale partner for unique loans that are outside of your wheelhouse. It's a good idea to explore all of your options, and you can use our website, PrivateLenderLink.com, as a resource to find capital providers, as well as law firms that specialize in setting up mortgage funds. From the main menu, click Services to access our service provider directory, then click Capital. Browse the main list or filter by category: warehouse lines, funded loan buyers, wholesale lending, etc. Click on each company's profile to learn about the program, then click the green contact button to find their phone number, an email form, and a link to their website. To find attorneys that can help you create a new mortgage fund, click the services link on the left side, select Legal, and then click the Fund Advisory category. When you reach out to a law firm or a capital provider, please remind each company that you found them on privatelenderlink.com. If you found the content in this video to be useful, please click the like button, and be sure to check out our other videos about private and hard money lending. Thank you for watching, and see you in the next video.